Good afternoon. I'd like to welcome you all to the November Monetary Policy Statement reading. I'll start with introductions. At the center of your screen and at the center of the table is the Governor, Bank of Uganda, Mr. Michael Atingego. So you're welcome. And on his right, Luganda. And my name is Andrew Elwana, and I am the Acting Director of Communications and PR here at Bank of Uganda. In today's program, we shall have the reading of the Monetary Policy Statement by the Governor, and this will be followed by a Q&A session, question and answer session, and lastly, we shall have the translation in Luganda. With that, allow me to invite
the Monetary Policy Committee, MPC, of Bank of Uganda maintained the central bank rate, CBR, at 9.75%, reflecting confidence in the improving economic environment, while core inflation averaged 3.9%, both remaining below the medium-term target of 5%. In October 2025, year-on-year headline inflation fell to 3.4% from 4% in September 2025, driven by declines in both core and food crops inflation. Core inflation is to 3.4% from 4%, reflecting lower inflation in education, accommodation services, and other goods. Food crop inflation moderated to 6.1% from 7.4%, supported by favorable weather conditions. In contrast, energy, fuel, and utilities inflation rose marginally to 0.1% from minus 0.1% due to slight increases in the prices of liquid fuels. The inflation outlook has been revised slightly downwards relative to the August 2025 forecast. Core inflation is now projected to range between 4% and 4.5% compared to 4.5%. The overall outlook remains broadly balanced, shaped by both upside and downside risks. The investment could intensify core inflation pressures. The downside risk includes GDP growth reached 6.3% in the financial year 2024/2025, up from 6.1% in the previous year. And this was supported by improvements in agricultural and 7% in the financial year 2025/2026, rising to implementation of the 10-fold growth strategy, which is unlocking opportunities in agriculture, infrastructure, and extractive industries. Indeed, a major global rating agency recently revised its outlook for Uganda to positive from stable because the economy continues to exhibit stronger momentum compared to her peers. Despite the favorable outlook, several challenges, especially from the global scene, persist. Rising trade barriers, tight global financial conditions, weakened business and consumer confidence, and elevated policy uncertainty could weigh on global and domestic growth. Nevertheless, optimism does remain. Large-scale infrastructure investments and sustained private investment are expected to bolster growth. Faster disinflation and easing global interest rates could also improve the financial conditions and stimulate domestic activity. While risks remain marginally tilted to the downside, the medium-term outlook is positive, with Uganda well-positioned to sustain robust growth through strategic reforms, enhanced resilience, and expanding sectoral opportunities. While domestic macroeconomic environment continues to strengthen, the MPC remains cautious on both global and domestic uncertainties that could affect the near term. Consequently, the central bank rate has been maintained at 9.75%, set at 3 and 4 percentage points above the CBR respectively, resulting in a rediscount rate of 12.75% and a bank rate of 13.75%. The MPC considers the current CBR level appropriate for maintaining inflation around the medium-term target of 5%, while supporting economic growth and socioeconomic transformation. Any future adjustment to the policy rate will be guided by incoming data and continuous assessment of the evolving domestic and global risk environment. That marks the end of the reading of the November 2025 Monetary Policy Statement. Thank you for your kind attention.
Thank you, Governor, for delivering the monetary policy statement for the month of November. The statement will please drop your question in the comment section and we shall be able to pick it up. Do we have any questions?
Good afternoon. Eddie Khan is my name, from Uganda Media Center and RTV. My question is specifically the post-elections, which gets into inflationary pressures and steaming to increased government expenditures.
Thank you so much, Eddie Khan.
Financing costs in the shutdown if the
regulations. What's the BOU's enforcement roadmap, including the timeline?
The Bank of Uganda has tools to manage liquidity, not only to mop, but also to inject, depending on the circumstances that are prevailing in the money markets. Now, your question is specific to elections. I think any election-related financing, and there's also external financing. This is part of the total financing package. So I cannot attribute that this particular financing is for elections, because we're looking at a budget that covers all government expenditures, including for elections. So it's part of that. All I know is that the budget deficit for 2025/2026 has kind of like increased slightly to about 7%. The temporary liquidity movement, sometimes you have liquidity injections on account of government expenditures. When government releases its expenditures, is paid through the commercial banks mostly, and because the government accounts are in Bank of Uganda, once you pay out money from Bank of Uganda, you are injecting money into the system. And remember, the money that you are paying out is also part of the domestic revenue collections, because all the revenues that are collected come to the Uganda Consumer Fund account. All the revenues that are collected through the issuance of government securities, there's an account where they're held in Bank of Uganda, and any external financing is all held in Bank of Uganda. So when government begins to cut out checks to pay the beneficiaries, there is an injection of liquidity. An injection of liquidity because government is debiting its accounts from Bank of Uganda. Not because Bank of Uganda is printing money. No, it's because government of Uganda is debiting its accounts in Bank of Uganda. An account that has been funded by revenue collections, issuance of government securities, and external financing. Now, depending on how that injection of liquidity affects the liquidity conditions in the market, if it is excessive, Bank of Uganda has its traditional instruments, things like repos, things like the Bank of Uganda bills, that can be issued to mop up the liquidity, to bring it to levels that are consistent to delivering an inflation target of 5%. So all I want to assure you is that the financing of the elections has been fully catered for in the budget, and Bank of Uganda Liquidity Management will just stay the same as it's been to manage any deviations in the liquidity that is being injected on account of government withdrawals from its accounts in Bank of Uganda. Then the other question was to deal with the impact of, sorry, could you repeat it? Was it the impact of the? Right. The latest I've heard about is that I think there's a deal about to be reached. I think they're waiting to vote for it. Once the Washington opens today, they're about to vote for it. But of course, we had anticipated that if the shutdown had continued for a longer time, just like the Fed chair mentioned, that the availability of data to inform the decisions would be a challenge. So since they had planned to have at least 2 interest rate cuts this year, before the close of this year, the absence of this data would have constrained them from taking the next cut. The next cut was done very recently of 25 basis points. So it meant that the next cut then would not be possible in the absence of data. So what would that mean for financial markets? And it seems like a deal is likely to be made, and maybe those concerns might wane out. So that's how I would like to answer your question. Titus, you asked a question about large SACCOs. I will ask David, who is the Executive Director of Supervision, to respond.
Governor is nothing to add. Over 1.5 billion and institutional capital of 500 million. So any SACCO about 90, but enforcement mechanism includes before I go to enforcement, we are carrying out a sensitization of the public regarding these large SACCOs. And this is jointly with all the key stakeholders that include the Uganda Microfinance Regulatory Authority, Ministry of Finance, Ministry of Trade, and all the other related parties. So this is a joint exercise to try and organize this sector that badly needs these services. Those that are non-compliant, what shall we do? The rules are very clear of enforcement of anyone that becomes non-compliant. And one of the kind of sanctions they impose, they could be legal sanctions, stopping you to take deposits, closure if necessary. But it is wrong to come under regulation. The law was never passed. But I want to tell you that statements of individuals cannot amend the Act of Parliament. If there's any change in the Act of Parliament, it has to be done within the Parliament, but not by mere announcements. That's the only confusion that we...
Much for those responses. Our second one is by Mr. Mwanje David Lusembo, and he asks, what is the success of government bonds? Do we have any other questions in the house? Okay, you can have that one as the last question.
The SACCO umbrella body that you talked about came to tell the public that the story was misleading, calling on to SACCOs to comply with the regulation, with the law rather. I don't know whether BOU found the single regulator to, manage the SACCO industry, because there are multiple now. We have BOU, of course, and then we have the Register of Cooperative. There's sort of a lot of confusion. So I just wanted to get your view on what you think about having a...
Governor, those are the questions for now. Thank you.
Okay, thank you. I think On the issue of forex reserves, it's been made possible because Bank of Uganda has been very innovative, proactive in building up reserves using EAC target of about 4.5 months of import cover. And market conditions permitting, we will build reserves to that level of 4.5 months. And also we are aware that there are vulnerabilities, there are risks in the who are injecting Uganda shillings into the market. Now you need to strike a balance between the increase in the shillings in the market with the reserve that you're building. You should be able to manage the liquidity that is resulting from the purchase of foreign currency reserves. And so far we have the tools to deal with that. So how much shall we build in the future? It will depend on two factors: the market conditions and our capacity to manage the resultant liquidity.